The final accounts is mainly prepared to know the financial position of the concern. The information about the previous year is not available, means you can just ignore this column. So we can record only the current year information. Liability. In horizontal form, we have liabilities at our left hand side. That liability we are going to write as sources of fund. Hello everyone, I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 12 of Unit 1, subject Accounting. In the last session, we finished with final accounts of a sole trader. In today's session, let us discuss with a new concept, that is final accounts of a joint stock company. So in the last class, we have discussed about final accounts of a sole trader. So sole trader and joint stock company is two different concepts. In today's session, let us discuss with joint stock company. In today's session, introduction, meaning, objective and format for final accounts of a joint stock company. Let us begin with this session. Final accounts are those accounts that are prepared by joint stock company at the end of fiscal year. That means final accounts is prepared by sole trader as well as joint stock company. This final accounts is prepared by joint stock company at the end of every financial year or fiscal year. The purpose of creating financial account is to provide a clear picture of the financial position of the organization to its management, owners or any other users of such accounting information. That means the main objective of preparing final accounts is to give the information or to give a clear picture of the financial position. Final account is prepared to know the financial position of the concern to its management. So financial position is important for the management, owner as well as any other user of such information, any other user of such accounting information. So the final account is mainly prepared to know the financial position of the concern. So it is important for the management, owner and other user of such accounting information to take necessary decision. Next, meaning. Financial statements are the basic and formal annual reports through which the corporate management communicates financial information to its owner and various other external parties, which includes investors, tax authorities, government, employees, etc. That means financial statements are basic and formal annual reports. It's a formal annual reports which calculated financial statement is prepared to show the financial position of the concern to the outsider, like for example investors, tax authorities and government as well as employees. So it shows the financial position of the concern and financial soundness of the concern, so that it helps them to take decision. It helps the investor to invest in the company, to make decision about their investments. So financial account includes the balance sheet, position statement as at the end of accounting period, the statement of profit and loss of the company. That means the financial account of a joint stock company, it includes balance sheet and profit and loss account. Both the balance sheet and profit and loss account you are going to prepare at the end of every financial year. Objectives of financial statements: to provide information about economic resources and obligation of a business. That means it provides information about the obligation as well as their resources. Next, to provide information about the earning capacity of the business. So this is helpful. It is needed for the investors. It shows the earning capacity of the business for the investors. To provide information about the cash flow. Cash flow means cash inflow and outflow. So it gives information about the inflows and outflow of cash. To judge the effectiveness of management. Effective management results in good returns or more earnings and profit. So it helps in judging the effectiveness of the management, how effectively they are using available resources, and the management ability to take decision, ability of the management to take decision, how they improve their business from the beginning, and how they overcome their risk, and how they improving their business from day to day. So it helps in judging the effectiveness of management. Then information about activities of business affecting the society, information about activities of business affecting the society, the activities taken place from the business, how it affects the society. So it helps in giving the information about all the activities. Next, disclosing accounting policy. Financial statement, it discloses the accounting policies they are using in their business. So it discloses the accounting policies. These all are the objectives of financial statement of a joint stock company. Next, this is the format of balance sheet of a company as follows. Balance sheet of XYZ company as on 31st March of particular year. Here, this is the vertical format of balance sheet. Usually, in the financial statement of a sole trader, will prepare horizontal form of balance sheet. In that, we have liability side and asset side. Asset side will record all the assets and liability side will record all the liabilities. But in the vertical form of balance sheet, we have particulars, schedule number, figure at the end of current year and figure at the end of previous financial year. So this is the vertical format. We are going to prepare balance sheet according to the Schedule 3 of Companies Act 2013. So here the vertical form of balance sheet, it includes sources of funds. Sources of funds, it's nothing but liabilities. Sources of funds is nothing but liabilities. Under liabilities, first one we have shareholders fund. This is the first thing, liability. In horizontal form, we have liabilities at our left hand side. That liability we are going to write as sources of fund. Under that first one, shareholder fund. Shareholder fund, under that first one, share capital. Under that first one, share capital. To know the share capital, we need to prepare Schedule 1. Schedule 1. We need to prepare Schedule 1. To write the balance sheet, we need to prepare schedules. So, to know the shareholders capital, we need to prepare Schedule 1. In Schedule 1, it includes all the share capital amount. So, we record all the share capital or share information in the Schedule 1. Schedule 1, share capital amount, figure at the end of current year. Here, we'll record the current year information. The current year information. Here, we'll record previous year information so that we can compare with last year as well as current year. In your problem, the information about the previous year is not available, means you can just ignore this column. So, we can record only the current year information. If there is any information related to the previous year, you are going to record in figures as at the end of previous year. So here, share capital, to know the share capital, we are going to prepare Schedule 1. Next, reserves and surplus. Reserves and surplus, you need to prepare Schedule 2. Here, it includes all the reserves and surplus of the concern. Next, loans and advances. Under that, we have two types. First one, secured loan and unsecured loan. For the secured loan, you need to prepare Schedule 3. Prepare schedule, then you are going to write the amount. So, secured loan, all the secured loan, you are going to enter in Schedule 3. The amount from Schedule 3, you are going to record in figures as at the end of current year. Next, the total of all this, Schedule 1, Schedule 2, Schedule 3 plus unsecured loan. For the unsecured loan, you are not going to prepare any schedule. For the unsecured loan, you are not going to prepare any schedule. Directly you are going to write the amount in the balance sheet. So the total of all this is total liabilities or total of sources of fund. So this is the total of liability or total of sources of fund. Next we have application of fund. It is nothing but assets. In sources of fund, we record all the liability, and in application of fund, all the assets. Under assets or application of fund, first one, fixed assets. For the fixed assets, you are going to prepare schedule 4. For the fixed assets, we need to prepare schedule 4. In schedule 4, we will record all the fixed assets like land and building, furniture, machinery, furniture and fixtures, all the fixed assets. So here we have gross block less depreciation. The result from gross block minus depreciation is considered as net block. So all this calculation we are going to do in schedule 4. In schedule 4, we will calculate all this information. So you will get the information from schedule 4. So that information you are going to record in fixed assets. So gross block, depreciation and net block, all the amount will get in schedule 4. Next, capital work in progress. So capital work in progress directly you are going to record in balance sheet. Next we have investments, all the investments. For investment also directly you can write the amount in balance sheet. Next we finished fixed assets and investments. Next, current assets, loans and advances. Under current assets we have inventories. For the inventory you need to prepare schedule 5. Schedule 5 includes all the inventories. Next, sundry debtors. For the debtors, prepare schedule 6. It includes debtors, bad debts, reserve for bad debts, reserve for doubtful debt. It includes all the debtors related transaction. Next, cash and bank balance. Cash as well as bank balance, you are going to prepare schedule 7. It includes cash as well as bank balance. Next, other current assets. Other current assets you can directly write the amount in balance sheet. Apart from inventory, debtors, cash and bank balance, any other current assets you are going to record amount in balance sheet directly. Next, loans and advances. For the loans and advances, prepare schedule 8. In schedule 8, we will record all the loans and advances. The total of this inventory, sundry debtors, cash and bank balance, other current assets and loans and advances is gross or total current assets. From this total current assets, we need to deduct current liabilities. So deduct current liabilities from the total current assets. Current liabilities, it includes current liability. To know the current liability, we need to prepare schedule 9. Schedule 9, it includes creditors, bills payable and all the current liabilities. Next, provision. All the provision like provision for taxation and such provisions, any other provision. Prepare schedule 10 to know the provisions. Next, after deducting current assets and current liability, the result is considered as net current assets. Total current assets minus total current liability is equals to net current assets. So result is net current assets. Next one, miscellaneous expenditure to the extent not written off or adjusted. So any other miscellaneous expenses not written off or adjusted, you are not going to consider previously, or earlier you are not going to consider the miscellaneous expenses. That expenses you are going to consider it now. So prepare schedule 11 to know the miscellaneous expenses. Next, profit and loss account. This is profit and loss account, the result of profit and loss account, either profit or loss. In the final accounts of a sole trader, first we prepare trading and profit and loss account, the result from profit and loss account, either profit, net profit or net loss. We will consider it in the balance sheet. If net profit, we are going to add with the capital. If net loss, we are going to deduct it from net capital. So, the profit and loss account results, either profit or loss, you are going to write in balance sheet asset side. Asset side means applications of fund. So, here you will write the profit or loss. So, after recording all this, now we are going to make a total. So, the total of assets, this total is considered as total of assets, and here we get total of liability, total of liability. That means sources of fund should be equal to applications of fund. That means the result of A should be equal to result of B. So, this is format of balance sheet. This is the vertical form of balance sheet. Next, vertical form of profit and loss account of a company. This is the vertical form of profit and loss account. Usually in final accounts of a sole trader, will prepare trading and profit and loss account in a single statement. But here you are not going to prepare any trading account. Here directly vertical form of profit and loss account. In this first one, income. First, you will record all the income. So, source of income, first one, sales. Schedule 12. Sales, it includes sales return, any other sales information. Next, other income. For other income, prepare schedule 13. And next, increase or decrease in work in progress. To know the increase or decrease in work in progress, schedule 14. This is the source of income. So, the total of schedule 12, 13, 14 is total income. Next expenditure. You will write all the income first. Next, expenditure. Expenditure, first one, cost of raw materials and stores. For that, you need to prepare schedule 15. For the exercise duty, you can directly write the amount. Next, employees remuneration and benefits. Prepare schedule 16. Next, other expenses. Schedule 17. Next, interest. Schedule 18. Depreciation. Schedule 19. So, this is total expenditure. Total income, total expenditure. So, income minus expenditure, that is A minus B. A minus B is equals to profit before taxation and extraordinary items. That is income minus expenditure. So, total expenditure. For the profit before taxation and extraordinary items, you need to consider total income, that is A minus B. This is B. So, the result is profit before taxation and extraordinary items. Next, any extraordinary items. Just prepare schedule 20 to know the extraordinary items. After deducting extraordinary items, profit for the current year. Profit for the current year. After deducting extraordinary items from the profit before taxation and extraordinary items, will get profit for the current year. From this, you are going to write the prior period adjustment. If any prior period adjustment is there, you are going to consider in schedule 21. So, prepare schedule 21 for the prior period adjustment. So after deducting schedule 21, the amount is profit before taxation. Profit before taxation. Next, after that, you are going to write provision for taxation. So provision for taxation you are going to deduct. Then profit after tax. After deducting tax, you will get PAT, profit after tax. Next, balance of profit brought forward from the previous year. Any balance of profit from the last year, that is brought forward for the current year. You are going to write that amount. So the total is total profit available for the appropriation. So now this is the profit. So this profit is for the appropriation. So from the income, you are going to deduct the expenses, that is profit before taxation and extraordinary items. Next, deduct extraordinary items. Then that is the profit for current year. Next, deduct the prior period adjustment. If any prior period adjustment, just deduct it. That is profit before taxation. After that, just deduct provision for taxation. Next, profit for the current year. Just add any balance brought forward from the previous year. Balance of profit brought forward from the previous year. The total amount is profit available for the appropriation. So this amount, so the total profit available for the appropriation, you are going to appropriate here. First one, proposed dividend. Next, corporate dividend tax. Next, transfer to debenture redemption reserves. Then transfer to reserves. Transfer to any other statutory reserve. Balance of profit carry forward to next year. Next, total of appropriation and balance carry forward. So the total of profit you are going to appropriate for all this in this steps. So here the total of profit and the total of appropriation and balance carry forward for the next year. So this is the profit and loss account. So in this session we just learn the introduction, meaning and objective of the final accounts of a joint stock company, as well as we learn the format of final accounts of a joint stock company. To prepare the balance sheet and profit and loss account, we need to prepare schedules. For this, for the final accounts of a joint stock company, we need to prepare 21 schedules. So, first write down the format of balance sheet as well as profit and loss account. Then start preparing schedules. Soon after preparing schedules, you can fill the balance sheet as well as profit and loss account. For the balance sheet, you are going to consider this amount as a profit for the balance sheet. In balance sheet, we have profit and loss account. So for that, you are going to consider this amount, total profit available for appropriation. So this amount you are going to consider for balance sheet. So first, draw the format of balance sheet as well as profit and loss account. Then start preparing schedules so that we can prepare the balance sheet and profit and loss account. This is all about today's session. Let us meet in the next session with the problems on joint stock company. Until then, keep watching. Thank you.